Hey everybody, and welcome back to this episode of Hamilton Icons. I am your host and local real estate agent, Justin Little. Today I am joined by Matthew Pickering, who is a mortgage advisor with National Bank. Matt, thank you so much for joining me today.
Thanks for having me today. No, I'm excited to be here. I appreciate the opportunity.
Yeah, we finally get to connect in person. We've kind of known each other through the
Family circle, the
family circle, I guess. Yeah.
wrestling scene, a little bit of everything there. But no, yeah, I'm really happy we're connected. We've had some good files on the go, a lot of things that we can help each other with, right? So, no, yeah, thanks for having me. Excited to be here to chat with you.
Yeah, it's always such an interesting occupation because especially right now, you're at the forefront of everything happening with these rate changes, Bank of Canada, like your role becomes so much more crucial during times like this, right? So what are you been seeing? Like this obviously is going to air in a couple weeks, like from when
Yeah.
we're recording this. But what are some of the trends that you see? Because I think that's what I get that question.
No,
What's
exactly.
happening and
Makes sense. So yeah, I mean, I've been with National Bank for 5 years, over 5 years now. And what I like about that is if you look at what happened with rates over the last 5 years, you've seen it all, right? There hasn't been much consistency with rates. So, we had the COVID days where we're handing out 1% rates. We got up to 6% maybe a year and a half ago. So now we've come down quite a bit. And what I like about my job is I get to see what other people are doing, right? I'm talking to real estate investors all the time. I'm talking to first time home buyers, a very wide range of people, right? So like right now today, I would say all my rates are variable. All my files are going variable. If you're talking to me about it last year ago, I was only doing the 3-year fix rate. So everyone was taking a 3-year fix because it was the lowest rate for the shortest term. Variable was still a lot higher, right? So it had to come down quite a bit to be close to that 3-year fix. But now, like for example, we had variable drop 2% in 8 months, right? So variables come down pretty quick. Fixed rates have been sticky. We haven't seen much change in fixed rates, and we're gonna kind of continue to see that trend. Like if you look at where we are today, we're like low 4% variable and fixed, right? So historically, that's not crazy. We're not in the 6% anymore. Like I'd say an average rate, let's call it 3.5. So, we're kind of getting back to normals, but we're going to still see some stuff come down.
yeah, it's interesting with the variable versus the fixed rate. Like variable, I went variable rate back in October, which I benefited from these rate reductions, which is great because you know what, I was variable on the way up,
Right.
so I thought,
I know.
why am I gonna go shy now? Exactly. When I could finally get an advantage from these rates coming down.
Makes
It's
sense.
interesting because the fixed rates, like you said, they aren't really
They're not crazy.
moving,
Yeah.
and then we have like I this statistic changes every time I open a news article, like 25% of renewals or 50% of all Canadians are renewing, like whatever what number is
So I
okay.
mean, we're told a million mortgages are up for renewal this year. So in 2025, a million mortgages are up for renewal. But what's crazy is what I'm also seeing is people breaking mortgages now to go to these rates, right? So let's say you had to take one of those 5.5 fixed rates or 6% interest rate. Those are the people that are now like, yeah, that's too high. So I'm doing a lot of, files where let's say your penalty is $10,000 to break your mortgage. We consolidated that into your mortgage at a 4% variable rate. Your monthly payment's better even with that penalty absorbed. And now you're going to start continue seeing some of these drops, right? So there's a lot up for renewal this year and next year. But there's even just more random stuff happening with people breaking mortgages, right? So yeah.
And you guys have pretty competitive rates. Like you guys are really trying to go out there and get business right now.
To me, it's also who's driving the bus, right? So for my files, I'm always going to do whatever I can to get the deal done, right? So there's some good competition right now among the major lenders. So at National Bank, I'm at National Bank. We're a major bank. We're a tier one bank. We're going to be competitive with rates when it comes to, BMO, TD, et cetera, right? So I find I'm not losing files because of rates because of either maybe my aggressiveness or maybe poor offers or whatever the other cases they're having. But I'm not really losing files because of rates. And I mean, yeah, it's just kind of helping the client. At the end of the day, that's what I love doing is helping the client. And I'm not going to lose a rate for 5 points or what, or a deal for 5 points, right? So how can I, get the deal done, right?
And National Bank, for some reason, I know you guys are a tier one lender. For some reason, it's always one of the more obscure. Like you always think of the Scotia.
We're top six, right? So everyone knows they're top five, right? So you're like your top five, your TDs, CIBCs, et cetera. But we're like, no, we're top six, right? And you're like, okay, you just kind of created your own category, let's call it. I always say though, we're top 6 bank, but we're top 3 when it comes to rates, right? And then that turns people's heads a little bit. They're like, okay, now you got my attention. Even like for the people, sometimes I'll get a call and be like, do you guys do bank accounts or have like locations? Like, yeah, we're a major lender. Of course, we're nationwide, right? And I always say too, like, take a look at the stock performance of National Bank, right? So a lot of the advisors I work with are preach National Bank too quite a bit because the stock's been fantastic, great performance over the last couple of years. So, yeah, it's a major lender. We're gonna be, and again, I'm gonna be pretty competitive.
Yeah, and that's good to know because top 3 in rates is really good actually because people sometimes just go to whatever. They go into their bank, they get pre-approved, and then they stop at that, right? Or they, like, get a rate from there, and they just think that's the best way to go, and they don't wanna consult with other people, right? Which I think is always worthwhile.
Right.
Like, I think people think, "Oh, I'm with RBC, I should get a mortgage with RBC," when that's not always the best case. Like, I was with TD my entire life since I was, like, I don't know, I think my parents opened a bank account for me when I was
So that's the way it goes. That's the
and
way it goes.
so TD was the worst to deal with. They were actually the worst rates, right? And I ended up getting a mortgage somewhere else. So that's why I think it's important that people kind of go through the different options, look at who's being aggressive right now, and then kind of going down
No,
that road.
makes sense. Like, honestly, it's funny when you talk with customers all day, like some of the perceptions people have where it's like, okay, I'm going to go National Bank for the mortgage, but like I don't really want to change all my payroll, income deposits, all my bills and stuff. And we're like, if we're just getting you a mortgage loan, like you don't have to completely change. Like, yeah, we would love you to start banking with us, doing some of this stuff, but at the end of the day, it's just a loan, right? So your loan, let's say you have an RBC checking account like yourself. Instead of it saying a RBC mortgage, it's gonna say National Bank mortgage. It just at a lesser rate, right? So, yeah, it's one of those things that, sometimes people, go to the easy thing because they think that's the right way, but there's a lot of competitive options out there.
Yeah, well, that's good. How long you been with National Link for?
Yeah, so over 5 years, it's been a great couple of years. Last year, I was a top producer across all of Canada. For context, that translates to 180 files, $110 million in volume. So, I mean, I don't like just saying that to pat myself on the back, but why I like saying that is every file's different, right? It's no different than your customers, right? Every situation's different. So, a lot of the files I'm getting aren't your cookie cutter, I make 80,000, what mortgage I have. No, no, it's more, okay, you're self-employed. Where are we working around? Where's there exceptions, right? When we were having high rates, qualification was tough, right? So you had to find an edge on every file to get it done. So again, going back to me being aggressive on trying to find ways to get done, it translates into volumes.
Yeah, and the volume's important because it also shows that you're able to get certain things done or you know the best path to go, right? I often relate to my business when somebody's talking about using possibly somebody else or they're interviewing other people and they go, well, if that other person does 3 and I'm selling a house a week and they only sold 3 last year, it's not that we're bragging that we do a lot. The point is we're in it every day,
Right.
so we know how to do it
Oh,
better,
right. Yeah.
and it's similar with you being able to think of creative workarounds for people to get qualified,
Right.
right?
And a lot of it's strategy. Like my favorite part of the job is the strategy because again, your average mom and dad will just need a new mortgage or they're up for renewal. But there's a lot of, let's say, real estate investors where like, okay, I own property one, I need to refinance it, pull out X amount to get ready for property two that I'm gonna buy. So for me, I look at that as two files right there. If I can, just show up and give them a good offer. So it's kind of building that strategy, that trust in that relationship to help build out their goal, right? If their goal is to own many properties, let me help you there. Let me show you. A lot of times I'm going to teach customers too, like, so this is what I do when I qualify you. This is how I'm looking at things. So, let's say you're going heavy on work expenses because you're self-employed, or let's say, whatever the case is, you have a lot of credit card debt that we can consolidate on a rental. There's a lot of tricks that can kind of help customers to say, if your goal is to keep going with mortgages, this is what we need to start showing, right? So it's building that trust with them and teaching them some things on the way.
Yeah, that's huge. And so, does National Bank work with outside brokers, or is it just your in-house advisory staff?
We do have some broker relationships. We used to have a channel set up a couple years ago that they ended, just because a lot of fraud coming in, right? So a lot of broker channels, you kind of get some junk that comes in, and it just didn't work out. But I know they're opening it back up. So the brokers do have some access. My understanding is a very limited amount of brokers can get to National Bank. I like brokerages. Like, don't get me wrong, I work with brokerages. There's a need for them, right? They're a great one-stop shop where if one bank can't do it, they have a solution. I like, working directly at the bank. I actually used to work at a brokerage and I went to the bank where sometimes it's the other way around. I like working directly at the bank because it's kind of like, to me, it's like buying a car, right? It's like going to a corner car store lot where they have some options or you're going directly to Ford, right? So I know National Bank's products inside and out, right? I know how to get the best rates. You could be talking to a broker that's going to National Bank and have completely different rates than what I'd be offering, right? So it's kind of, different. Again, it's hard to know all your products when you're a broker and work with multiple lenders. Where directly at National Bank, I know it inside out.
No, that's why it's important, I think, to go directly to somebody that is within that bank because then, like you said, you know the products better than the broker does,
Yeah.
right? That's pretty good.
Yeah.
So you said 5 years you've been doing it. What made you get into, mortgages?
Yeah, so it's a good question. So a bit of background on myself. So right out of university, actually during university, I started working at another lender called a BMO. We were a internship, working downtown Toronto. Those were the days where you think you made it. You're working downtown, suited up, making like not much money, right? So you're working down there, taking the GO train, and I started off in client documentation. It's funny because I never thought I'd go as far as I did with mortgages, but I started off in client documentation, which now relates to my job. I then moved to customer services, working with branches and the wealth management branches. Now that's part of my job, right? And having that interactions, and I really excelled in that role because it was talking with customers or talking with the branches and building relationships. So that's where I really went. And then after that, I moved into a reporting role in risk management. So I was in risk management and compliance, which again, part of my role now. So those three were like pretty large pillars that built where I am today that subconsciously I didn't know I was going to be in mortgages. So I found that gave me a really strong backbone. And then funny enough, after that tenure at BMO, I moved into Maple Leaf Sports and Entertainment. So I worked there for about 2.5 years. I was actually there when the Raptors won the championship, which was pretty cool. I got flown out to the finals. A select few of us got flown out to the finals, so it was really cool there. Really cool opportunity. And then while I was there, I was liking it. It's a cool opportunity, especially at the time I was living in Toronto. So, there'd be events. Hey, who wants to go to a Leaf game tonight? Who wants to go to Justin Timberlake tonight, or whatever the case is, right? So it was cool when I was down there. I then, since at that time I getting married, bought a house, moved to Burlington, so that commute was getting a little tougher. And MLC was a really cool place to work. It was more of a cool factor than maybe top dollar, let's say. So at that time, I started working part-time at a brokerage. So I was like, you know what? I went to school for economics and finance. At MLC, I was kind of getting down the path of going, IT, go doing project management, kind of going that route. So for me to excel, I started had to learn coding and stuff, which I could have the capacity to do, but I like the people interactions. I like the sales side of things. So I started working at a brokerage part time, and one of my friends, he's like, "I think you got what you need to work in mortgages. Come work for me, and I'll teach you everything part time. Like you can work after hours." And then I really appreciate the opportunity I got, and it got my feet wet in mortgages, and I loved it. So at the time, my friend was working at National, and he said, "Hey, there's this job that's it's part salary, part commission. It's really safe. It's a great first step if you're getting into mortgages." So I left. I left both jobs at once. So I quit MLC. I quit the brokerage and say, "Hey, I have this opportunity at National Bank." A couple months later, COVID hit. Right. So what does that mean? Great news for mortgages. At MLSC, there's a lot of layoffs because there was no sporting events. All the events were canceled. So to me, I got extremely lucky, and like I find a lot of success. It's a bit of preparation, a little bit of luck, right? So I got lucky and moved into National Bank, had a good amount of training, and then, like I said, COVID hit, and then that just really allowed me to excel, build relationships, and accelerate here.
Yeah, COVID was a time that I think everybody was scared for the start of it in our industries anyways, right? It's the whole thing stopped, it felt like,
Yeah.
but then it very quickly came back.
No, exactly, right? Like, it was a lot of unknown, and, like I said, COVID rates were huge, right? So everyone wanted to refinance. There's a lot of interactions there, a lot of people doing that, but as you know, it really flooded our markets, right? How many people wanted to become a realtor? How many people want to get into mortgages? So, I mean, I kinda tip my hat to everyone that's kinda doing successfully right now. Is the last couple of years, we're handing out 6% rates. Not everyone can do that, or, prices went down for your side, right? So not everyone can do as much as you can. So, to me, it cut out some fat, let's say, in our industry. So for those who are still, accelerating, I think it shows that there's a little bit of worth there.
Yeah, it's these markets that you find that the people that are gonna make it, like, this is the ones that thrive. Mix are gonna not do it, right? Because, stat I heard And I don't know how reliable it is. National Association of Realtors, 70% of realtors didn't even do a deal last year,
Wow,
2024. 70%,
that's crazy.
right?
There's a lot of part-time realtors too, right?
Yeah, but there's probably also a lot of part-time mortgage.
There is. Yeah, there is, right? People like my team, I'm based in a Toronto team, and there's some people that maybe want to be part-time, and again, National Bank wants it to be a full-time job, but even at brokerages, a lot of people like, hey, maybe if I just push a file through every month, that's a little bit of side income, right? Some people can consider both of our jobs a side hustle, right? But the customers know. The customers know if you're not talking mortgages or real estate every day, right? So you gotta kind of find the right person that way.
You have to. Like, I feel like I was born, so I'm in it every yeah, that makes sense, right? You're a mortgage.
Yeah.
It makes a difference when you're talking to somebody you were
It's every day,
right?
it's in my sleep even, right? So you're just talking about it and, no, it's second nature at this point, it's easy, right?
Yeah. It's fun. Like even I don't but you do you work weird hours? Do you find yourself working?
Typically, no, like, I find and I'm lucky to do this, but I try to be 9 to 5, right? And the way I look at it is my credit managers are 9 to 5, right? So if I have to talk to credit or a certain team, they're not online after 5 p.m. I'm a family man too. I got 3 young guys, so I got a 4-year-old, a 2-year-old, and a 4-month-old now, right? So I try to cut off after 5 to be, turn into dad mode. But there's sometimes, like, for example, if I have a networking event for the day, and I'm doing business development or whatever the case is, there's still work to be done. So tonight I'll be working, for example, but it's worth it, right? You got to find that time to continue to do stuff like this and still make sure the customers that you're talking to and promising all this stuff that you're getting their stuff done, right?
Yeah, 'cause at the end of the day, that's what it is, right? Just giving the customer service, being on top of it, right? It's nice that you have that balance and you haven't let it take control of your life. And I think it's important to spend time with your family because your kids are only going to be straight there so long.
No,
You
exactly.
got to enjoy it. You don't want them to grow up and then it's like,
Well,
you
well,
weren't around.
well, that's why I like mortgages, right? Like if a mortgage transaction's like 3 weeks, right? Like 3 weeks is a normal transaction. I can like my record's probably 5 business days or something crazy like that. But if someone's coming to me like, hey Matt, I need to close next week, you're like, okay, one is probably fraud or there's some kind of red flag that I have to work around. Or sometimes you get people that come to you and it's closing in 2 months. You're like, okay, I don't need to do it this second, but to me it's about communication. Everything's always about communication. So, okay, thanks for your documents. I'll be in touch in 2 days or 3 days or by end of week or whatever the case is, right? So, as long as people know you're on it and that the communication's there, they don't, we have time, right? So, yeah, that's why I enjoy my role too, because sometimes you have to drop everything, but sometimes, we will get to it when, there's the moment.
Yeah. And I think that's when you're talking about like when you have to deal in 1 week, it's fraud. One thing that pops into my head, well, A, besides the fraud, which I know became rampant at a certain point. But do you have a lot of people right now struggling to close on new construction?
Yes, for different reasons though. So I find my problems with new constructions are the property values, right? So you bought a condo 3 years ago, sometimes we're not hitting that property value. I have some properties like even non-condos. I had one come back 200,000 under purchase price. So the challenge with those ones are the new constructions in part. So I'll finish this thought, but a lot of times, you have a mortgage approval at bank one and we can't do the appraisal till the property's ready. The appraisal came back short. So you're like, now I have to shop around and go find another approval. So that's sometimes where the scatter is to be like, okay, my approval's now no longer good at bank one. Now I got to go to bank two. So that I find sometimes the issues and like again, the appraisals are throwing that off. And sometimes it's the builders, right? Sometimes the builders like, oh, it's gonna be closing in a couple months, and there's like, oh no, we need your approval letter by next week. So it's like, so it just kind of sometimes gets rushed for that sake. But new constructions, it's its own file type to say the least, and good and bad come from it, right?
Yeah, I've been finding deals like a little bit in the assignment market. Nice. So I find, well, obviously, those are all people that at this point they can't close.
Makes sense.
If somebody can close, they're not assigning it just because of the cost, but they can't close on it. I keep running the situation. I have people because I run ads for it. I've literally had somebody call me and say, "We're closing in 3 days. Do you think I could assign my condo?" Yeah. It's like, what are you waiting 3 days? And it's same people with finance, and like it's like it came out of nowhere instead of actually making a plan.
Makes
I
sense.
think a lot of people got caught up in this, I'm gonna buy it, I'll never close on it, I'll sign it, I'll make 50K, 100K,
Yeah.
without ever being prepared to actually have to move into a
Right.
unit. Okay. Every pre-construction that I've ever bought, I was always of the thought that, you know what, I can always just move into it. And there was actually a case that I did. I bought a condo and I was like, you know what? And me and my wife spent a year in a condo. It felt like we were on vacation.
Right.
This little like 600 square foot
Yeah.
condo. It took us 20 minutes to clean. It was fun.
Like,
I wouldn't want to do it again, but at that time,
had a purpose.
yeah, but we were prepared because we ended up buying another investment. And then I was like, well, I think I'd like to sell, move into this, take that cash, whatever, and then we'll move forward with the other. So,
Yeah.
but it's just you always have to have that mindset of, okay, what am I doing worst case?
Oh, yeah.
Best case, I'm living in it.
Well, so many people are like, "Oh, don't worry, I'll have the down payment for when I close." But it's like, I also have to demonstrate where your down payment's coming from, right? So it's like, are we hoping it's from employment? Are we getting gifts? What's our story? And like, what do I have for proof? But I think too, the new construction, like 10 years ago, you bought new construction, you just doubled your price, right? So now we're not seeing that, but and it took a lot of people to realize it after going through it themselves, but that kind of, that has changed, right? So a lot of people were up a couple 100,000 by the time that it was built, but that's not the case anymore. We actually do assignment purchases too. So we'll consider the assignment purchase price, right? So the new price. But then our challenge, of course, is what's appraisal value? Because we always have to honor the lesser of the appraisal value in the purchase price, right? So whatever the lesser is what we're going to finance it up to. All right. So, yeah,
So the appraisal could still come in.
appraisal comes back low. It doesn't matter what the purchase price is. And we can appeal we can always appeal appraisal values. I mean, appraisals have been up, down, sideways over the last 2 years. Certain properties like, let's say, cottages, right? There's no comparables in certain areas, right? Condos, I feel like a lot of people were rushing to sell them. So maybe there's some data out there that's lower purchase price versus what it is. But even to these new construction, let's say condos, there'll be 20 of them for sale when the condos completed, right? So there's almost like an over supply of these units. So the price isn't probably worth what it could be in a normal year, right? So all factors that are challenges for realtors, mortgage specialists, and the client. But again, it's putting our heads together and finding a solution that how can we get this done, right?
Yeah, and this is the market that you need people to know how to get things.
Makes sense.
It's the market, right? It's not just anybody can go and do it. So it's important that you're able to do it. I didn't know you guys did the assignments too. And the appraisal value is a big thing, right? Because a lot of them are going to come in short. But then again, a lot of people that are purchasing them well below what
Right.
people paid. Like there was buildings, they were buying them new construction, 1,400 per square foot on average in Toronto. And now they're reselling for like 1,000 to 950 per foot. So people are reselling them. Makes it difficulties getting the builder to sign on it.
Right.
And then now I've heard this, and I don't know, maybe you can clarify this for me. When it comes to, so somebody does purchase significantly less, they get the mortgage. Is that somewhere that now other banks see that that mortgage was registered for that amount? They use it for the appraisal, like this, and like, wow, this unit sold for a lot less, and they use that as a basis now.
They could, right? So let's say it depends if it's a private sale. Private sales, you're typically not going to see them all, right? And it'd probably be a better question for an appraiser, but my understanding it's going to be based off of properties you can search online, right? So whenever I'm appealing value, House Sigma is my first bet, right? What kind of properties have I sold in that area? So private sales, maybe not. And if it's like significantly less, it's all has to be justifiable, right? So let's say there's 3 condos and two were 700 and one was 300. What's up with that 300, right? So they'll average it out. Your appraisal will have at least 3 or 4 comparables. So it does usually work out. And on an appraisal report, they're going to say, okay, we're going to make adjustments based off of, larger square footage. Here's some points, here's the finishings are a little bit nicer. Here's some extra points or whatever. Maybe they remove points for whatever case, right? So, yeah, just kind of see what there is on the market, and they're not going to base it usually off of one property.
Okay, so the private stuff, like when we're doing an assignment just between buyer and seller, it's not posted anywhere. It doesn't get.
That's my understanding. Yeah, that's my understanding.
That's what I was curious about, because then I wasn't sure, because I know the builders don't want them on MLS, and I thought part of the reason would be obviously that public record if it sells for less. A, because then for financing, but then B, everybody else that bought that building is going to see it and think, what the heck?
No, it makes sense, right? And that's usually something like something's up, right? Even what they'll look at is like days on market, right? So if something's listed for 700,000 and it's been on the market for 80 days, it's usually like, okay, it's not going to be worth 700,000 then, right? Because they can't sell it at 700,000. So they'll look at a few factors, but I find a challenge in some of my larger challenges I've had with appraisals over the last couple of years were, let's say, multi-units, right? So you have a triplex. No one's selling triplexes. Why would you sell a triplex when the market was down? So there was really lack of comparables. We do ADUs, so garden suites. Garden suites is a big thing National Bank does. I've done probably about like 20 over the last year and a half, maybe. So it's kind of like a niche market, but really cool. So The challenge with some of these properties is there's no comparables. So what are we doing? And then depending on the appraiser, like the appraiser isn't a National Bank employee. We assign it to, let's say, Brookfield, and they'll just, put it up for grabs for a self-employed appraiser. And it's a roll of the dice who you're going to get, right? Sometimes it's good, sometimes it's bad. Sometimes they have experience with some of these properties, right? So again, it's being prepared with, I'll have customers that sometimes have PowerPoint decks. Be like, here's what I've done. Here's the money I've spent. Here's comparables that I think are legit. They'll share with the appraiser. Sometimes they don't even read it because, again, you'll get your appraisers that have their own opinions. Um, that's where I come in, appeal it, bring my team involved. We have an appraiser sector that, they'll go through their report. They'll go through my arguments and kind of hopefully work out a value.
So with the garden suites, because it's fairly new, you're right. There really hasn't been sales. There hasn't been too many sales with homes with garden
Oh,
suites.
yeah.
So I guess it's trying to come up with the appraised value of it, but I guess then they're taking into consideration, I would assume, the construction costs and what it would be after the fact.
It depends. So, like the garden suite, so we always joke with a lot of the customers that I work with that have one. They're like, as soon as one of us sell, we're all refinancing, right? Because now we have this comparable. So, but no one's selling them because they're great products. But what we do with garden suites is, so National Bank's one of the very few lenders, major lenders too, that will consider the garden suite part of the property value, right? So let's say another major lender, they're going to just look at the main dwelling and say, this property's worth 800,000. That's it. We'll say, okay, main dwelling, 800,000, garden suite, 200, 300,000, and then we get a higher valuation. So that gives us a little bit more, it gives us a better offer when we're talking like we're going to 80%, and most of these people want the maximum amount. So the garden suite, how we look at valuations, depending what the situation is. Most of the time, when I'm talking to someone about a garden suite, it's I've already gone through it, I built it, and now no one's going to finance me because they're not considering the value, and I can't get the money out. So they'll find me after the fact, or even sometimes I've helped people with, they want to build a garden suite. Let's look at renovation loans, for example. But what we look at is a series of things. Let's say for one, there's a duplex. It's a duplex with a garden suite, right? So on my application, that's 3 units. I'm just going to call it a 3-unit property. It's not a triplex, but it's a 3-unit property. So one approach is they can say, okay, based off of the main dwelling of its duplex, we're going to look at the area, and there are some duplexes, and that valuation is 700,000 or whatever. Now we can either say, based off of the garden suite, how much was spent on it. If it was recently done, I can demonstrate maybe 190 was spent on it or whatever, or, different approaches. And then they'll add a value to my duplex comparison. Even some in certain areas, what they could do is say, okay, you're a duplex with a garden suite. Here's a triplex that's all connected. That's pretty close. Like square footage is the same, number of bedrooms, finishings are close. That's good enough. And again, now you're in a different tier of a triplex versus a duplex, or sometimes single family duplex is a big jump, right? So it's ways that, again, it's not a perfect approach because every city's different. It's always based off of comparables at the time, but I've never not done one. Everyone that's landed in my lap, I've never not done a garden suite because we still have the better offer when compared to the other lenders.
So it's good to come to you if it's built, but even before you build it, if you're looking to explore that option, you guys do the construction loans, which I'm assuming gets released in draws based
Yeah.
on how far it is.
Yeah, so we have a renovation program and a self-construction program too. Renovation program I love. I talk about it all the time. I could do a whole podcast just on that, but it's really a great way to use. Really, what you're doing is you're reaching into future equity, right? Because sometimes you'll be like, hey, I want to do a renovation file, and I have 100,000 mortgage, and my property value today is $1 million. It's like, well, you have the equity right there. You don't need a renovation loan. You just want to refinance, and on you go. But so the people that are going through the renovation loans are already kind of at a max mortgage, or they have these plans when they want to buy the property. Because with a renovation loan, you can do refinance plus renovation or purchase plus renovation, right? So you can kind of see, and really the biggest difference to me is, do you own the property or not? Like, do you need the money to pay out the old mortgage, or do you need the money to close a property? But the renovation loan most of them I'm doing are, over 100,000, which would be about 4 draws. And you only have to have 15% available of the full renovation. So, for example, you're doing a 300,000 renovation, you just need to have 45,000 available, and you should get it back, but it's just there for draws and to start work. And I always suggest have a little bit of a buffer, because sometimes our draws are based off of progress, right? So you spend 50,000, but that work isn't demonstrated it's done because I know, whatever the case is, we'll have to come up with another way to use line of credit or whatever to get there. So, but it's a great program. It's a great way to use future equity. It's a competitive rate of renovation loan, so it's 7.5% to use the money to do the renovations. And why I love renovation loans is, let's say your total loan after end of it is 800,000 mortgage with maybe like 600 to buy and then 300,000 renovation loan. I have a rate locked in for you for this whole process. So you start renovations, I have something locked in, but I can adjust your final rate, right? So you're paying the 7.5 rate right now for the renovation. As the draws go, it starts going up, but that final rate I can adjust, right? So I have something locked in case rates go up. But in today's environment where rates going on or going down, I can be like, okay, I had you at 4.5. Now we're 4.2. Let's change that to 4.2. And then, oh, we got another drop. Let's change that rate, right? So it's delaying that final rate, which is a great thing in today's market.
That's a good way to look at it, especially if you're going down the route of doing garden suites. Like, I feel from an investment standpoint, it's one of the best things you can do because just to build these, I know, and they're coming out with kinds like, I know I'm starting to see some more prefab situations
Right.
happening in Ontario, but even if you're going to construct from the ground up, if you're spending 250 to 300,000 to do one of these, what are you gonna buy for that otherwise that you would rent out?
Absolutely.
You're gonna get what? Maybe you'll get a condo.
Yeah.
Your condo fees are gonna be astronomical. Then you're dealing with a condo, and then it gets older, and then you have assessments and all that other extra tax,
Absolutely.
closing costs. Like, there's so much more money that goes to it instead of just building where you already have the space to do it,
Absolutely
right?
nice.
And that program, I know we talk about it a lot because we're in the industry. Like, now you can, do that on your property. Well, not every property. You still have to have certain qualifications,
Yeah.
but it's a lot more easily accessible than it was before. But I still feel like the general population, it's such a nobody knows a lot about it. Like, we need HGTV to come out with this. Well, no, maybe we should go on, but they just to come up with a show about like building gardens
Oh, absolutely.
so people can start to see the advantage of it.
Yeah. So I'm actually part of a group that's sponsored by CMHC, and what they're trying to do is create like a hub. Because you're to a point, no one knows about this. So this hub would kind of say, hey, you need financing, talk to this. You need a builders, here's your contacts. And it just kind of gives you the overall information. Because what we're seeing is cities are becoming more relaxed with these permits. They want to do this. They know there's a shortage in housing. So let's add units in this way instead of just banking on new condos being built, right? So I love it. And to your point with the return on investment, like, I've done presentations in these actual garden suites that have been built, and sometimes they have basements. They look like full little houses, right? So, like, they can range from maybe 150, 200,000 to up to 350, 400,000. But to your point, you're spending 300,000, and I see the market rents on these. We can use leases, but most of the time they're not, they're still being finished. My market rents are like 25 to 3,200 a month. Right. So let's look at Burlington. You go buy a townhouse for 850, you're renting it for 3,000, or you build a garden suite for 250, 300 and renting it for 3,000. Right. So again, the property has to support it. So that, a builder would go through the requirements on, what the variances look like. What does that all look like? But so we're starting, like, a lot of the realtors I work with that are pretty heavily involved in garden suites are, they find these corner lots and they're like, this is cool. Because sometimes it's like driveway one over here, driveway two over here. It looks like two different properties and you don't even think they're connected, but it's a great investment opportunity, I think.
Yeah, they're the bread and butter, those corner properties,
Yeah.
especially in the Hamilton Mountain. Like, I know you get a lot of those bungalows or 1.5 stories on corners, right? They're huge lots, like on the east streets and stuff. They're massive. So, that's definitely very popular. And I think it's just cool. It's nice that you guys are recognizing it because I think a lot of financial institutions still don't know how to deal with it, how to recognize it. Like you said, a lot of investors have plans, but they're running into a wall where it's like, how I
They ran out they
finance
ran out of their money.
value.
Exactly. They run out of their money. They don't have that exit strategy. And, like, what I would say that's kind of a positive thing for 2025 was there was an insurer change that you're allowed to now refinance up to 90% for an additional unit, whether that be converting to a triplex, duplex, or add a garden suite. So this is now an insurer requirement. And to be honest, not many real estate investors are going to go the insurance route because one of the units have to be owner occupied. So it might be good for maybe a first time home buyer wants a house hack and have a rental part of it. But to me, what I like about the insurer changes is now having a bigger conversation among the major lenders, right? Or in all the banks in reality. Because now it's like, okay, we're now being told by insurers we can finance them, consider them in the property value, consider the rents on them. But our policy doesn't go with that, right? For some of these other lenders. So it's going to kind of hopefully align with everyone sooner than later. And like I said, I like that National Bank is the one that's doing it, but it also, I'm good with competition. If other lenders are looking at it the same, it's going to make appraisals easier. It's going to make some of my life easier having, other options out there. So we'll see how this changes over time. But as you know, anything at a major lender takes time, right? Things are slow to change. So we'll see how that adapts, but it's an interesting one to follow, to say the least.
Yeah, it is. So you've been doing it now 5 years. What's your favorite part of this job?
My favorite part is helping people, and I know that sounds cliche, but it's true. Like, some of the stuff I see where I mean, over the last couple of years, credit card debt, line of credit debt, right? We take you out of a private mortgage. Let's say you find some people and they're in a brutal private mortgage, gotta pay exit fees, whatever, right? And they're just you can see them getting gouged, right? That stuff drives me like, I know people have to do what they have to do, but the thing that kinda, like, makes me wake up and really get at is helping people out of those situations. And, when we're consolidating debt and, putting 20% credit card debt into your mortgage and you see what their monthly payment is, oftentimes I'll do an analysis saying, hey, you probably don't even know what you're paying per month right now. Yeah, you're paying the bare minimum interest on a bunch of credit cards, but you're not paying principal. So here's how we calculate what you're paying to get it down. And then here's your new payment, right? Here's your new payment of, if let's say 4,000 to 2,000. And it's like, geez, like I'm saving so much by doing that thing. And they're just so thankful, right? So those are the things that I really love about my job is just helping people and getting to get them free up some cash flow and help them where I can, right?
Yeah, and that's a big component of it. And you're right, it does sound always like if you are you're like, oh, I love helping people, right? But you do. And I find that the people that are often successful, like in these industries, like service industries, that's because you just have you generally just enjoy helping people.
Exactly, and that's all it is, right? Like, even at the bank, you go into the bank and, you get a teller there and they're having a hard time getting you a check. They're just trying to help, right? Like, they're probably new. They don't know. So, but that being said too, like, a lot of those, nice, cute, warm, fuzzy stories are maybe a dime a dozen, 1 out of 10. And the other ones are, I also like the networking side of it, right? Building that relationship with either partners or clients and building that strategy. So like I said, the strategy side of it is one of my strengths and where I enjoy because you're almost living through someone's life where you're like, okay, this is what you're doing. This is how we're going to finance it. This is our storyline pretty much. And then all we have to do is execute it. And when you see them start from step one to step, 100, it's just exciting to see them execute. And they're, again, thankful and you help them get there. So it's cool stuff.
Especially after the last couple of years where it's been a bit rocky.
Exactly. Well, that's what's cool too. Like, it's been rocky, but you see where the market changes, right? So, I mean, I own a few rentals myself, but it's also like seeing where the other maybe more experienced real estate investors or the people that are just shifting their attention. What are they doing differently than they did a couple years ago? And you're kind of like, you're using some examples of what people are doing to help other customers, right? So what are the trends? So a lot of things I'm doing is like I couldn't forecast, some stuff, right? Because who knows, especially like this month right now with tariff talk and all that stuff, who knows where rates are going? But it's also like more like, again, based off of what other people are doing, based off of like, you know, let's say I'm working on 20 or 30 files right now. Here's a common theme of what I'm doing with all these ones, and let's apply that because it makes sense for a majority of the files, right? So the trending and the themes are cool to see as you do a lot of volume too.
Well, yeah, you big stats nerd.
Yeah, so I was in reporting, right? So I was in data analytics. I was in reporting. So like I'm an Excel guru pretty much. I've gone away from that because now I just have my banking systems. But yeah, I'm a numbers guy.
I'm like that too. Very lyrical, love numbers, and same with Excel. Like, I love it when I make a great spreadsheet. Oh, it's disappointing I can't share it with anybody. I get a little upset about it.
Back in the day, some of my, VLOOKUPs and all, had all that stuff. I was pretty good at that back, and doing some of the reporting and just kind of finding ways to report stuff and stuff. It's cool. Even when I work with customers, like, hey, I kind of created something on the back end that, I'm trying to figure out what my cash flow should look like. And they're a little geeked out on Excel, and then I can geek out with them on Excel. And you just like, you click, right? Because you're like, yeah, we get it.
It's an esport now, actually.
Excel?
Excel. Yeah. There is an Excel World Championship.
Can you gamble?
Sure.
If you really want it, right?
That's able on anything now.
That's crazy.
Yeah, I saw it and I thought, wow. I'm like, maybe this is something down the road for me,
Yeah.
Get into the Excel World Championship. I couldn't.
No, that's me. I would be destroyed. I'd be destroyed. But hey, as long as you think you're good at it, you're good at it, right?
Yeah. Okay. I enjoy it. But it's so what obviously last couple of years probably been a bit challenging just with trying to, navigate this market. What are some of the challenges you're going through right now in that industry?
Yeah, I mean, so it's kind of like I said, appraisals is one of the things that's beyond my control, right? It's stuff that's what can I control and what can I can't control. So appraisal is something I can't control. Some of the challenges is I guess like just again qualifications never easier. We are a major lender, so sometimes you connect with the client and you want to do as much as you can with them, but they don't qualify. They're just simply not there. But that's where you kind of come up with a solution. Okay, I don't like being a no guy. That's just how I am. I'm here to help. That's all it is. So I don't want to be like, nope, you're declined. Try again. Right. It's more, okay, how can we get this into approval? Okay, maybe we need to add a cosigner, right? Maybe we need to shed some debt. Let's look at this. Maybe we're not here today, but maybe in 6 months we can get there. A lot of times I can work with self-employed people and their accountant to kind of work off of, you guys went pretty heavy on expenses. We can use your business net income as part of your qualification. Let's just not write off everything that you guys touch, right? So let's look at some ways to find that balance of qualification versus expenses, right? So again, it's a qualification. It's some of the things that are beyond my control as much as I want to push it. Um, what else would I say that is a bigger challenge? Yeah, that's probably
Collecting people.
documentation, right? So you get all different sorts of clients, documentation, and this is where I'm at the point where getting an assistant will be a very value added. Sometimes you'll get, someone take a picture of their T1, one page at a time. You get 20 pages, and okay, now I have to, I want an update on my file, Matt. It's like, okay, well, I've just downloaded 5 out of 20 documents. I'm merging them, and some of those things, right? Or e-signatures, a lot of people are really quick with them, but sometimes I'm on the phone with an older couple that needs 30 minutes coaching because their inbox has merged them or whatever the case is, right? So there's always some technical challenges that, at the end of the day, it's part of the job, right? You gotta help the person through it. You can't just be all salesy, get them done, and then just be like, oh, you gotta help them from start to finish, right?
Yeah, that's what I find, like, kinda grows the business even more is when you take that extra care, right?
Right.
Yeah, I couldn't do your job just for the sheer documentation
And
aspect
flip
of
it.
it.
Your job's challenging too. I've done a few of my rentals where I'm trying to lease it out myself. And you just sitting there and like, "Oh, a no-show." But I was here ready for it, ready to do it, but so, again, challenges both ways for sure. But to me, it's also, being good at what you do and just liking what you want to do. People can feel that, right? Like me and a colleague were talking the other day, and it's a funny way to think of it, but she was saying when things are going well, 1 plus 1 actually equals 3. And what we mean by that is your referrals. Let's say I get a referral from you and another realtor. If you're doing your job, I'm probably getting a third referral from that from one of the customers, right? So momentum to me is everything. I think momentum is something you gotta hit while you have it, and that's why I find I've done pretty well over the last couple of years because I don't wanna lose that momentum, right? That momentum is, helping clients and then that leading to a referral. Because when you're talking about a mortgage or buying a house, that's probably all you're talking about because a lot of people just wanna talk about what's on their mind at that time, right? So you're talking about, "Oh, my mortgage up for renewal. Oh, no way, my mortgage up for renewal too. Oh, you should talk to my guy. He was great. He gave me a good offer, great to work with." So you wanna really run with momentum, and again, one of my challenges is keeping that momentum, and how can I not lose it? And I haven't for a couple of years now, but you always wanna make sure you're still staying on top of that, whether it be business development or going that extra mile with customers.
Mhm. No, that's a good answer. Yeah, and, to your point about the leasing, going back to that,
Yeah.
they study paperwork for that, that's what drew me wanna be a mortgage broker because we've had to collect paperwork for tenants and stuff.
Right, that makes sense.
I got one today, it was, like, all the paperwork was it's from Brazil, it was all in, like, Spanish or Brazilian, so rather the ways, and I was thinking, I don't know how to even read that where to begin.
We'll just put that to the maybe pile, right? Is the top one. We'll see what else we got. No, that's fair. That's,
Yeah.
yeah, that's fair though. That makes
Yes,
sense.
I sure you hear a lot of interesting stories too around certain things.
You do, and you talk that's why I like my job too, is you talk to someone different every day, right? So you talk to your business partners all the time, but those customers, everyone has a different story, right? So sometimes you're like, that's the first. Like you meet some interesting people, especially maybe some of the people with high aspirations of wanting to become I own 20 properties and they're starting that first one and look, okay, well, let's pump the brakes and see what we got to set up to get there. But you talk to a lot of different people, a lot of people that are panicking, I have my mortgage up for renewal. It's 100,000 and I'm going from 2% to 4%. It's like, it's okay. So the world's not going to catch on fire, right? We can look at your amortization to stretch that out to maybe balance your payment or whatever the case is. But you get different kind of customers to say the least. And it's fun interacting with them.
Yeah. Yeah, especially the amortization is, like, a stressful thing to go through too, right? And, first-time home buyers, I imagine, is a very, stressful one, but that's I always enjoy the first-time home buyers. They're actually probably the most amount of work, but it's always enjoyable.
It depends. Like, I find the first home buyers are probably the most rate sensitive because that's all they really know is like you got to get the best rate. Which don't get me wrong, rate's important, but they're pretty prepared when it comes to like I mean, a lot of first time home buyers. I'm not having any issues with document sharing or e-signatures because they're usually younger and pretty quick. But that being said, there's some questions, and my job is to just either dumb it down or just open the door for questions. Because if you're reading anything about mortgages, there's insurer changes happening in December and January. What does this mean to me? So you just want to open that door to be like, hey, you're going to read stuff, you're going to talk to stuff. My job is to just help you understand it because, like I said, all I do is mortgages. I know the ins and out of it. So helping them understand it in the way that it takes them to understand it. Sometimes people are visual, some people need to process it in a different way. So just kind of getting them to understand what that looks like is kind of the fun part too.
Yeah, and it is. And it's fun just seeing them go through the whole process and get it,
Alright,
right?
totally.
But you're right, they are rate sensitive. DocuSign is no problem.
But you ride their high, right? Because 'Cause they're like, "Oh, I just bought my first house." And you're like, "I've been working with a pre-approval for you for 4 months. We talked about what your budget was. You're within your budget. You're like, you're listening. The house is beautiful. Everyone's happy." And it's just like, again, you ride their high of because the whole transactional side on a purchase is thrilling, right? It can be depressing, it can be exciting, it can be many things. It's emotional, right? So you are dealing with those emotional clients every day, and, you're good or bad, you're helping them, control their emotions, right? So my job is also on the finance side, right? So I'm always like, if I can remove any stress on the finance side, that's my job. I'm not going to be helping you pack. I'm not going to be helping you with, your painting or anything, but I'm going to make sure the financing is looked after, right? So that's how, if I can relieve that headache and make you sleep a little better, that's what I'll do.
Yeah, that's the same. I'll send something on closing, but, I'm not gonna help you pack the loss.
Exactly.
They try to make it as easy
That's
as possible,
exactly.
right?
That's all we can do.
Same, especially first time buyers, everything's a bit stressful. I always, the buy something, sometimes they even get the next day like, "Oh, did we make the right decision?" Right? It's always they're nervous about it, and it's just, it's common, but it's fun.
Yeah, well, that's the challenge with the rates, right? People are like, "Okay, I've never taken a rate," or even let's say, me and my wife have been fixed rates our whole life, and now variable does make sense. You have to talk in a way where anything could happen, right? We've seen what happened to variable. So many people got burnt going variable. Let's say 2 or 3 years ago, we saw it take off that no one seen like that hasn't happened in over 20 years, but now it's happened, right? So you got to kind of build options. So it's building flexibility in your mortgage is what I like to say was like, let's say you're up for renewal and now you're going to a higher rate. Well, let's put that over higher amortization. All that really means is you're making your mandatory payment smaller. There's always clauses to pay off faster, prepayment privileges, payments on principal, whatever you can. You can still chip away. Because like a lot of, let's say, older couples, they're like, I don't want to start paying off over 30 years again. Like we want this gone. It's like, well, all you're doing is shrinking that mandatory payment, add an optional payment on top so we know it's going to be over 20 years. But if anything ever happens, you can cancel that optional payment, right? So now your mandatory payment's the smallest amount possible. So it's kind of providing that advice. And again, I don't like predicting rates because 9 out of 10 times you're probably wrong, right? So it's more, what are we seeing other people doing? I read a lot on forecasts of banks, right? So it's like, I'll never say I think this, but I'll say like National Banks predicted this or BMO predicted 150 point increase or drop this year, for example. So just kind of going over some of the stats, some of the data that's out there. And, also I do put my 2 cents in. Like I like diversification. I don't think if you had 10 rentals, you should do all variable, split it up a bit, right? So just kind of providing some kind of advice that you can't, it's win-win.
Yeah. Oh, it's true. I guess if you had to go back, little Matt had to go back. He gets to tell little Matt something when he was first getting into this business. What piece of advice would you give yourself?
That's a good question. I would say, like, again, I think it's preparation and just being prepared for luck, right? So, like I said, I got super lucky going into mortgages when I did, right? I think it's just don't take, like, take educated risk, right? So, take the chance on yourself to go out there and, if something comes up, you're ready for when that opportunity comes. Same with like buying a property. You want to have your pre-approval ready in hand, and then when that you find that opportunity, jump on it. Don't just get pre-proven by anything, right? So it's the same kind of concept in that sense. But my thing is just put your best foot forward too, right? Like there's days you don't want to do stuff, there's days you don't want to work, but my thing is show up, right? Show up because it means a lot to other people, right? So this world and this job is it's not just about me, right? So I can't just not work one day because I'm not feeling like it. I have people I have to help, right? So show up in it. To me, that's something I've always learned. Even when you're younger, you go out to a work event and you maybe have a few drinks at night, and the people that show up the next day, you can tell like, okay, they're there. But to me, it's showing up and just put your best foot forward.
Yeah, that's good. You said, but showing up for luck is how did you
Preparing for luck,
preparing for luck.
right? Because
I like that.
right, it's not again probably a little cliche, but it's like if you're in a good spot where things are going your way, you're ready. It's not just diving on the first opportunity, but it's having being available if something comes up.
Yeah. See, I'm huge on that stuff. Like, huge on manifestation. Like, I
There you
feel
go.
like, preparing for luck is a real thing. And people think like luck is luck, like it's something that just happens. But you have to be prepared that when the opportunity comes, you're able to take advantage of it. And that's preparing for luck.
Right.
That's preparing for luck.
Well, and to me, it's like again, we're numbers guys, right? We're both number guys, so we take calculated chances, right? So it's like, okay, what's worst case, what's best case? Break it down. You probably overthink stuff, but it's calculating, right? Calculating is what I'd say it is.
Yeah, that's awesome. Well, I appreciate you coming into the studio today, taking time out of your day to do this.
Absolutely, no,
Create information. I look forward. We're gonna obviously have many chats after this, and then if everybody should keep an eye out, we're gonna have you on cable 14 too.
is
So
it?
that'll be a fun segment.
Yeah.
And then what's the best way for people to reach out to you if
Yeah, I'd say just you can call my cell or you text my cell 905-802-7788. My email, I'm very responsive, matthew.pickering@nbc.ca. Maybe if you could post my stuff in the comments or something too, but reach out to me. I'm on some social channels too. I'm not as good on my social media as yourself, but there's still work to be done there. But I got my LinkedIn, my Instagram, of course, too. But yeah, I'm always available for a call or a chat or help you guys out where I can.
perfect, we'll put all your info in the description below.
Awesome.
Thanks for coming on.
Thanks again for the opportunity. I really appreciate it.
Absolutely. Everybody else, thank you so much for tuning in again this week. If you haven't already, be sure to subscribe. You can also click the video that's going to appear on your screen to watch the last week's episode if you liked what you heard today. Until next time, take care.